Well, good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Wednesday. We are now at the 7th of February, 2024. We're at 6 p.m. Central Time. You know, it's an interesting market. It's the never-ending rally in the stock market. The market is obviously blown through many of the numbers that the traders thought it would go to. Even the bulls are probably there with their jaws dropped and going, when does this thing end? Well, it doesn't end until it's over. And if you looked at the earnings, you saw Disney did better. You're watching another ARM up 24% tonight, ARM, if you were watching that. There are shares that are getting hit. PayPal not doing the job that it should be doing. Still a lack of trust in that. And, you know, we use at our company, PayPal, Stripe, AuthorizeNet, a bunch of the different ones. I can tell you PayPal's the weakest of the group, by far. We used to use them really a lot, and we just dropped it. They couldn't keep up with that, with Stripe, which I think is the best of those that tie into the different vendors, and it gives you the interface on the websites. So you watch those things. But in the futures, what else going on? Before we get to the day's news, still dysfunction galore in Congress. They can't get money for Ukraine. They can't get money for Israel, Taiwan, and they can't figure out the border. Next, they can't even get the impeachment right on the Republican side. They thought they had a vote. The most embarrassing thing for a House Speaker or the leader of the Senate would be to call a vote that they think they have in hand and they lose the vote. It is a lack of confidence then by those under him. There's already calls for Mr. Johnson to step down, that he's the wrong guy for the job. And I can see that. Mitch McConnell got the same problem as the leader of the minority in the Senate. A lot of people don't think he's doing the right job. And as Americans, we're looking at this all and going, what the heck? Tomorrow there's going to be a hearing at the Supreme Court where the case will be argued about President Trump being on ballots. Is it legal, illegal, what some of the states are doing? Just because they hear it tomorrow doesn't mean you'll get a speedy answer. These things take time, but it's moving along. And that brings to us all the other things that are going on at this point in time. And there are so many that it just seems like for America, everything's dysfunction at this point. And I would say that that is very much the case. In the morning, we're going to have a series of reports coming out. We get the weekly jobless claims. They'll come out at 7:30. They're looking for 220,000. Still a relatively low number if that's where it comes in. U.S. Treasury Secretary Yellen will be in front of Congress against the Senate, the financial stability oversight. I hope that there's a lot of questions there asked to her about commercial real estate. We're watching what's going on with that New York commercial bank corp, and I still think it's just the tip of the iceberg. Last night we saw Moody's took all their credit ratings to junk on them now, and the question is they are trying to unload, I'm talking the bank now, trying to unload a lot of RV loans and like. When they say unload, that means selling them off for a big loss to get the regulatory numbers better in line. They've cut dividends. But this is the first of many. How many of these other small banks are like that out there? And that's something you got to think about. U.S. December wholesale inventories and sales data, they're going to be updated at 9 in the morning. We get the EIA natural gas numbers, and they're not looking for a very big draw, just 78 billion cubic feet, due to the warmth we're getting. And last, the U.S. consumer. Well, you know, in November, I remember they were looking for 9 billion. They got 23 billion. Now they were looking for 14 billion. And for December, they got 1.6. So it proved what I thought. The consumer rushed out in November and did their Christmas shopping. And in December, they didn't have to. They'd already done what they had to do on the credit. It'll be interesting to see what the rest goes on, but I don't think these numbers are swelling at this point in time, and that's something to think about. So you would wonder, with all that's going on, how the stock market just keeps making higher and higher highs. I'm wondering myself. I mean, it is amazing any way you want to look at it. The dollar sort of stalled out against the 104 area. Energy markets just sort of stable here at the $80 mark in the Brent, and in the crude about $6 lower, $5 lower, trading at near the 74. Bonds and notes quiet at around the 414 area in the 10-year note. So when we take a look at the stock indices, this is a weekly chart of just closes. You're at a high. You're at 50.13. All right. Now, understand, the highest we were looking at, many of the analysts at the beginning of the year, was 5,200. We're at February 4th. We're seeing all this dysfunction in Congress. And yet this market's able to run like there's no tomorrow. Amazing is the understatement. You can see how you're running up here. You've got the pattern of higher lows, higher highs, still bullish. Pullbacks in the market, well, they're still going to be well supported. Your first major support area on a break is about 100 lower at 49.11. The Bollinger Band top is at 50.48, near the 50.50 area. And you have the strongest indicator I know of, which is the embedded reading. When the red line closes under 79, that's when I think the correction will happen. But it hasn't happened at this point. And the market still is able to just move on up. Same is going on in the NASDAQ. You've now forced it to embed. Target could be the 18,000 level. Now, something interesting in this that I've got to say, is anybody out there looking at all the tech companies that are laying off people? It's not that there's a lot being laid off. Let's assume it's 30 some odd thousand that's been announced in total. But it used to be that if you were in tech, your job was as secure as you can imagine. And now we're seeing in different divisions, be it Amazon and a healthcare division and so on, these are all the tech people, and they are getting let go. So interesting times that we're in. The Dow up. Now, today I had my clients take their money off the table too soon during the day, but I had them take their money off the table here. And now I regret it. I don't mind saying that. Boy, it could go up even further here. Things happen, all right? Not the best call on my part. You know, and I'd like to be honest with you. I wish I could tell you every call was a great call. By the way, my job is to try to make my clients money. They made money. That's on the trade. I left the majority on the table. Not the best trade. In the Russell, this is still the bear market. You're watching all the others go up for highs, right? This is, if anything, I would be telling you go short. Stops over that high, looking to see can the market break down here to the 1918 level. It's just not a good looking chart. Then we come over into the 10-year note. And in the 10-year note, the market's running into the resistance at the 18-day average. It's a strange chart. You have the swing line higher. You're oversold as can be. The bias is down. Nothing's working on the chart. In other words, they're not lined up for a trade in any manner whatsoever. The 5-year went back into a bear formation tonight. Now it's got lower highs, lower lows, calling for the market down here. Well, if that occurs, it means interest rates are going up. You would think that would break the stock market. It's having zero impact so far from what we can see. And if you're looking at the home builder stocks, they've taken off again too. Wild. Nothing makes sense right here. In the dollar index, terribly overbought. And look, you're starting to roll down in the momentum. This is where the battleground is. The combination of a 100-day average of close and the Bollinger Band. It is an area where I think pros come out of the market. I did not say bearish. I said it's where the pros come out. That's a big resistance area in the market. Flip-flop it. You hit the lower Bollinger Band, and you've been running it right through here. Are we embedding or not in the euro? And you can already see you got a 21 number. You close like that, it calls for the market to rally, but the resistance comes in pretty stiff at the 108 level to right here, 107.92 to 108. Right through there. So those are the resistance levels as I see it in the euro. You have a lot of work to do if you're going to make that market bullish. I'm not seeing it. I see that the pros might be willing to sell the market there, if anything. In the British pound, a lot of talk that Prime Minister Sunak should be cutting taxes and that politically he doesn't have a lot to lose by doing that. If he were to do that, which way would this go? What we've seen is the market tried the upside and you had nothing but failures. It just tried in the past 72 hours, the downside, and I'd call that a big failure, going from the 125.60 level up 100 points already off of that. No follow through, caught people going short under the Bollinger Band. You're trying to get in Bitcoin, the market to come up a bit here, and it is in an uptrend, but it's very overbought. I don't look for much more than the 45,517, but understand, this is a market that people were calling for the death knell down here, and I at least said, no, I'm not thinking I see that. I said, once you lost the bearish embedded reading right here, I said, I don't think there's much left on the downside. And as it turned out, it wasn't bad advice for my subscribers. Brent versus WTI crude. Okay, so we're looking here. By the way, I have the April Brent versus the March crude, in case you're wondering which markets. 532, and I just use the markets that have the most volume and open interest in them right now. In the April Brent itself, this is a neutral number. So you had a market that spiked up, gave up tremendous amount, $5 before you knew what happened. And it's now fighting a battle, trying to figure out what to do next at the combination of the 200-day average and the 18. An easy trade? No. A trade at all? No. This has been a difficult trade period for the past 5 to 7 days without getting a lot of new signals being generated to come into the markets one way or the other. And very frankly, owning both a subscription service for traders and a brokerage company, it's difficult, but you wait. Patience is everything. Everybody that thinks you can trade every day and have a trade is wrong. It doesn't work that way. Same thing happening in the March. I don't see anything right there. Heating oil. Do you have a seasonal that goes up at this time of the year? People don't know that. I watch seasonals a lot. So this market is now knocking on the door of the upper Bollinger Band. It held the 18-day average. It never did give a buy signal. It had that break into this and just a straight up rally again. Again, a difficult market call right here. And in that gas, I know I have been ultra bearish for you, explaining that I think that we're still going down. I wouldn't be surprised if the 185 levels hit over time here. The more we're producing, and we're producing a lot of crude oil, we get more natural gas, that market's there, and this is the time of year with this warmer weather, while all of our suppliers, and I'm talking to people we export to, want it, that'll die off too as you get into this time of the year. You're always rebuilding the winter demand, but it's been a milder winter than normal, and that's hurting price. And if you think it's not milder, wrong. Just look at how the temperatures have gone. In Chicago, is just as an example, we may set a record tomorrow. The 56 degrees is the record. That's the high that's expected. We may go through it. February 8th? Wow. I mean, unbelievable that you look at all this. So one of the things that you use in a market like this, if you're a day trader, are pivot points. Day traders like to buy during the day, sell during the day, and go home with nothing in the evening. Now, what is the evening becomes the big question when futures trade. If you really think about it, 23 hours a day from when they open Sunday night until they close at 4 o'clock on Friday. They close 1 hour between 4 and 5 p.m. Central Time, but there's plays in there. So traders will look at this, and often the chart that they use is a 15-minute bar chart. I have a free course that I teach if you're looking to learn how to apply this. I use this for one thing. I'm not a day trader. I used to do that. I find it better to catch these for my technique with my clients. The swing trade, as I call it, or a longer-term trade. And what I do is I use it for a lot of times. Gee, I have a buy signal here. What is the pivot saying? And I'll adjust sometimes to that. And it's amazing how it seems to fit in with it, especially when you put in the momentum of the slow stochastic. And I use this over and over. Not every day, I promise you. That is not what it is. But when I'm questioning, I'll go, during the day. I know I want in. Is this all I'm going to get out of the market on a correction? And I'll use the pivot. So how do you get it? Go to iraepstein.com under free offers. Move your cursor up here. It'll take you there as well. I'm Ira. You have a good trading evening. because we are open in futures, and I'll catch you first thing in the morning.